I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is October 26th, Thursday, 2023. So, traded Nas today. So, and I'm just gonna do the review. I'll do the review for both, but I'll start with Nas. So, as yesterday we were talking about another bearish day. Take a look here. I was showing what is this? This is Dow, and then this is Nas. So Nas, we opened up. So we ended up gapping down and then coming down and then popping back up and then selling. So very similar structure here. Idea was to get down here, and we want to seal this gap. They pretty much did that today. And then I didn't mention this gap right here, but when we're coming this low, after this, your intentions are coming into this gap as well. And then we have some more stuff going on down here too. So, and that all happened today. So nice, pretty nice. And then, as far as Dow goes, you'll see that one of the options I was saying coming down like this, instead of coming up, we would just come down, but we ended up coming down, then popping back up to the same place and then coming down. We came to about right here, right? So with that said, let's go into, I'll show you this trade here, but let me just do Nas first. So beautiful day, beautiful time to be in the market in a way, even though it's, it's a little difficult sometimes to hold these trades for coming lower. Sorry, I need to be here. But at the same time, this is more realistic. This sell model is still in effect. We're in this leg down, right? We've retraced from here and then retraced back down. So we're in this leg also as well. And then, can you put a fib from here to here? I won't get into that. The goal right here is to get and seal the rest of this imbalance. And then that gap is sitting right there. You can't miss that. And then we want a body closing, which today they didn't close. So, tomorrow I'm assuming that they'll have a lower price day, and then it might retrace. As Friday we'll be selling, and then we'll come back and then do like a U and then like settle up so the wick can be created for the actual week, right? So I'm projecting that kind of movement. I'm trying to make this video short and simple, but you'll see that we gapped down right here, 4 hour, came down, and then retraced back up. And this all happened by New York. So price came right back into the gap by New York, sold in its open day gap today, sold off, made another lower low, made another sell model lower, came below the gap here, and then body closed right above it. I mean, right on it. Can't miss that. And then it retraced back up for another lower high, and then it's on its way to make another lower low. So beautiful day. And let's take a look here. Smaller time frame, 5 minute. Pop down. You see it? Pop down, right? And then, and here's the thing. With this range right here, you didn't need to see. Here's the confluence about trading, right? You got all this different styles and concepts and authors and everything going on. And when you blend it, it's really nice if you know how to. But obviously the gap is key, but if you recognize this range from here to here, if you're in a sell model, you're expecting this to be, okay, we got A to B, right? And then from B to C, in a general typical range. Look at here, hot point at 70 right there. Now the price action is sitting inside the open day gap, right? So with the price action at 930 being here, this is also a plus to take the sell. Obviously, we're looking for a bearish day, right? And then they pretty much, we still did sell from the open. If you take a look at what I was trying to portray with this, so that retrace and then selling back down right there. So right here, the idea, well, it came lower obviously, and I can't pinpoint that, but same time, this range was key as well. But remember, where are you? We're inside this daily imbalance. I'm sorry, not daily imbalance, this weekly imbalance. blue box right here, right? So because of that, you got the 50 level sitting here. See that 50 level right there? That's what this is for right here. 50 level right there. We come to it, all right, beautifully, and the bodies are respecting it. Look how the bodies aren't even closing above that. So way too much confluence right here. So if you identified this range, you got a nice retracement, and you're looking for a sell model. So, you know, bounces up, retraces back, sells for a new leg down. Once that leg is down, it's going to be a nice retrace back for another sell model. So, and beautiful, beautiful comes right back into, well, first 930 sells it, right? Take the profit here for this trade right here. This is a 5 minute, so I guess I can go to a 1 minute. You'll see that we pop up in here, and we're so 50% of the open gap here, all right, and you're understanding that you're at 50% at the actual weekly imbalance, and then obviously besides that 70 sitting there, you are about the top 25% of this open day gap. Bodies respect, doesn't close above it or anything, and then we get a breakdown, we get a retrace back into that block. So this is there's a number of ways that you could have done this, right? So let me see if this is not, it's just kind of like, yeah, it's kind of looking weird, but just so you could see, right here, the price breaks down from that candle. First of all, and you know that, but you have to understand that we are inside the 50 of the imbalance, and we're in the 50 of the actual open day. So right there, too much confluence. You can see that we got a swing high right there. That when we break down, we got a swing high right there. But this is a risky trade, okay, for me to take this trade, which when the price comes back up into this up candle, last up candle, I don't want to see it go back past 50%. And then, you know, that's where my stop loss would be. And then that's assuming that we've already left that 50 as well. And then that's a riskier trade. Now, okay, to teach you correctly, obviously, to break down for one more time, when we get this break here after the 930 low, this is an actual resistance candle right here. But so is this. If you look closely, right here, that high, see this bullish candle? God, it's so annoying when they do that. I don't know why they can just leave it alone, bro. Fuck. God. Right there to right there. Why do I have this problem? I don't see other people do that type of shit. From there to there is also a resistance because it's a low, and then it breaks above and it breaks below it, right? So when it breaks below it, that's when you can use this also as a zone as a resistance. If I go back, you can see where it's sitting there. Probably needs to be darker, don't it? I'm gonna make this darker. I mean, it's real dark. All right, so anyways, number of ways to look at this in entry models. Okay, so this down bearish candle, when it closed, you're betting that it won't go above 50% or 75% at the least, never breaking the high, right? You could have put your stop loss there. That was one way to look at this. Many ways to look at this, to be honest with you. So that's one way to do it. And then also when the price broke down and made a shift of structure, which is what you should be technically doing, any new traders for sure. Then you get this imbalance here. You get the retrace back up into that zone as well, right? And then you could also have used this right here as a resistance because we break through that candle here and come back up in. Yes, right here it does pop up a little bit. That's allowed right there. But it, you know, the bodies are inside. And if you look even at 50% of that zone, it sells from there. And if you didn't even use that, I'm just going to put it back because I like that one better. Even when you look back here inside this imbalance here, when this bearish candle starts rolling, you'll notice that even the body right here is at 50% coming down. The weight is heavy and going underneath the 50 levels of all these different confluences you could be using. To keep it simple, the price comes back in this up candle, and then we come back up into this up candle, Same scenario. I don't want it to break that candle there. Yeah, that is so annoying, dude. If somebody knows how to change that or stop this from glowing, that'd be great. I don't know. I mean, setting it back to the backwards and all that shit, bring to back or whatever they call it. I don't know, man. But that's fucking annoying. um, but anyways, price sells down. Where am I taking this? This is the 8:30 news right here, and we're bearish. Number one. Number two, this is the most recent liquidity that I want to grab at the least. So I hold it to here, which is nice. It does break down. It comes to here, right? This is a very common pattern. I've showed you this in US 30 as well, where we won't take out that low, but we'll come low and then we'll break. Well, we'll take some liquidity here, and then we'll bounce up for a retrace, and get like a second stage in distribution selling. But it will bounce from here, and you could have put a fib from here to here, right? Like you could have done. Oh man, I hope this video is short. I gotta go at 6 o'clock for sure. So you could have even done this too, right? But I don't. This is just a temporary idea. I didn't even use that. But the idea is that you're building this low to lower low to this lower high, and then you're making a lower low. We're keeping it simple, but we're using areas of confluence that are going to be going where it's going, right? And then they do both. They accomplish both. They give you ranges and they accomplish these algorithm levels. I came in this business knowing it was manipulated. The only difference between me and any other teacher in the world is I knew that before I got in it. I found out how it works, obviously, with many different teachers, but in general, this is how it does operate, and I know how it's manipulated. So obviously, you'll see it being printed in price. So it's not buyers and sellers doing this, and that's a good feeling, because if buyers and sellers were doing this, you wouldn't fucking know where it's going. But that's the reason why we're able to know where it's going to go, is because it is manipulated. And if it is manipulated, you're able to track levels at where it's going to be being taken to manipulated. All right. So anyways, that being said, and to keep it simple, lower low, lower high, lower low. This model here, remember, we sold from here and then we make a new leg down. Okay. So for me, taking this profit here, I don't need to be right, but I need to get the idea. I want the swing coming down. I'm taking profit. I'm guaranteeing it. If I'm a swing trader, and if that's your model, okay, this is a position you're holding it for more of a projection down, fine. But not taking profit here with this trade is not guaranteeing profits. For me, this is guaranteeing profits, taking it right here. So hope that makes sense. So because I know that in a sell sequence, I can also get look at this. I made the same video yesterday. Sell, buy, and sell, right? Or you could have looked at it like this. I'm going to zoom out real quick. Sell the whole leg, buy, because once you made this leg, what are you doing? It's still a sell model, right? So you're retracing back. This is a buy. So sell, buy, and then this is a sell. Now we close here, but this is probably going to keep going to look where you are in the stage of this leg. We close here. Whatever they end up fucking doing here, the goal is to make another leg just like this, right? Because you already got your confluence here of a range, right? So that's what we're trying to do. We're trying to leak in tomorrow until building in a range, which I won't get into right now. I'll say it at the end. But to make this short, yeah, it's very exciting, man. Once you know what you're doing and what you're looking for, man, this gives you hope. But you still have to have patience, obviously. And if you need to spend more time with technical analysis, do that, But I'm doing a lot of it here anyway. So, but okay, so here's the sell here. So you could have got in that up candle, or when it broke here and shifted, it comes right back in. Fuck, I'm deleting this thing, dude. I swear to God. All right, so it comes right back into this candle right here, right? And then the idea is in there as well, right? So that being the case, and then you can also use the confluence of that wick here, where it doesn't want to pass 50% of it, and it struggles. Many pieces of confluence, sells down, all right, and then boom, we want to take the profit there. All right, comes back down. Now here, watch this. This bounces twice. Also happened with Dow. So they look at internal high right there is just for liquidity, but this pattern is common because they won't take out that low, and what they'll do is they'll bounce here and come right back and retrace. Where do they retrace here? I got these little dotted lines right here. This candle right here, this is also a piece of resistance, this down candle. 50% of that level is right there. You can see that our price comes right to it. And then sure enough, sells off. You can see the candle, that bearish candle wicking back in and then selling off. You know, another opportunity right there with that imbalance, another opportunity right there popping in. And your goal is to obviously take out this liquidity that they engineered. But what's more important is not that low, not those lows, but that low right there. And obviously your goal is to make a leg down, but I don't need to, like, taking this profit here is beautiful. Like when I'm here, I'm using this as resistance. Let me see. You can see this, right? Hopefully I'm not like moving too much. But right there, that little space right there, look, very obvious for price to come back in here. And then as I showed you, you can see the retracement. But when we got to 50% of that candle down here, mitigation candle right there, see this right here? 50% tags it. All right, and then we get the bearish structure. I'm going to show you this trade, which is right here. You can see, I don't have it on my chart. I don't have all that stuff on my chart, so I don't need to. But the goal was to show you that here, we're getting to this low. That low right there on the 1 hour or 15, you can see that. That was my main target. Even though it comes here, our goal is to make that leg down, right? So we've already came up, didn't break that low, I already know, right? Comes, retraces right here into that candle I was mentioning. You could push it right there and then put the stop loss above that, but I don't like doing it that way. I like to wait for candles to start printing and going its direction. That's how I enter. So, but right here, beautiful day, man. Pretty much outlined, very simple what you're looking for. And then guess what? Okay, of course I leave money on the table all the time. You can't get all of it. But at the same time, you don't need all of it. But you have to understand this flow. I want to be done by 11:30 anyway, so I had to hold this until this hit it here, took the profit. I'm not fucking with them anymore. Sure enough, the day got even better. Look at this. Came all the way down to that gap here. All right, once we same story here. We came down and we bounced up and then we bounced back. Look at that dirty shit. So NQ is just as dirty. Don't think just Dow is dirty. Dow is just a lot more complicating as far as smooth price delivery. Let's put it that way, right? So another reason why, if you're having problems with Dow, go to Nas. It's fine. Reason why I traded Nas today was because I didn't want any fuckery either. So I knew it would just be a lot smoother. My targets here are a lot more obvious for me, and again, Dow's just a little bit rougher. So it's okay for you to switch to Dow if you need to. To Nas if you need to. But really, they're all doing very similar things. But you'll just see it's just a little bit tougher with Dow. But and don't let that discourage you either, though. You know what I'm saying? And yes, I've been teaching Dow all this time, but I just like Dow because of the manipulation. To be honest, with the I like the ranges that they have, and when the price comes down, like for example Dow, when it came down to take out this low, we would bounce from here and do a whole nother retrace. So I like those opportunities, but it's tougher for regular traders. I mean, it's not. Most traders won't trade it. Professionals even, they won't trade it. So anyways, we get another bounce here right there, and then boom, you get these candles. Look at price holding, bullish. Opportunity right there. You could have gotten right here. You could have gotten anywhere right here. I'm not going to go break down every single level, but the whole goal was to retrace. You could have done it a couple ways. You could have done it with this whole leg and you could have bought up to the 50 and been fucking done from here to here. This is usually I would take this trade, and it happens at 1:30. Beautiful. Time is in the factor as well, and sure enough, you could have took the profit out here if you traded it. If you move the fib from here to here, would have been okay too. Come right to a 79. Look at that, nicely. And then what was also nice is that I'm gonna leave that like that though. What was also nice is that it came in from here. This resistance here, this high, low, this higher high, when it breaks through and it comes back. This is also a resistance block as well on a higher time frame. But look how it comes right to the open of that candle. See the price over here? See that? Look to the left. See how it's right in here? So it doesn't bust above this. If it was gonna go deeper, then you would be looking maybe at a big shift. Who knows? Now, and I don't want to say that, breaking this high would be probably more important. But right here, once you're breaking this, then I wouldn't be looking for sells. This was a beautiful sell right here. And the goal was to get down here. It could have broke here, but not all in the same day. Asia and London will probably take care of this coming down here. But this was a beautiful sell as well, man. So, but I'm giving you the logic of it not passing this area here, and turned out to be a nice zone to stop at and sell off. See that? So, we'll see if that holds. Well, I'm gonna delete this. I got to make this video done already, dude. Okay, 21 minutes. So, also, what else I want to mention? So, I explained all this pretty much. You can see it dancing around the 50 level here. Breaking past it. Coming right to it here again, and then damn near settling at the top 25%. But, and then when we retrace, by the way, look how close we got to that 25% level of that entire weekly imbalance as well, right? That would have been sweet if it just touched that though. But and there's a reason why the algorithm is not taking out like that. See this imbalance? They want to leave that empty. So that's the strength of showing you that we're on the bearish side. They didn't come and tap that. Very right underneath it, right? See that? I can delete this, but whatever. Don't need to. But same idea here. When we don't tap right into this gap right here, see how we leave that open and look to the right? See how we don't take it out? That's because this price action that I just showed you with this block is stopping the price. And that's to show you that the algorithm is actually respecting its rules and its parameters and what it's supposed to do. So super game right there, right? Nice. And then another reason why to take this sell. Beautiful. I would have took that. If I would have took this buy, just so you know, I probably would have lost right there. But when it bounced again here, you never know. Could have took a loss there, but for me being antsy, I would have got in right here with this wick closing right there, and then the body is not below it. And any one of these opens would have been perfect on these next 3 candles, technically. But and then if you wanted to dip back into this imbalance right there, that would have been, could have pushed there, and your stop loss would have been there. Any one of those opens of the bullish candles or closes would have also worked. Let's see here. Price is I can't get it. It's just too much. There's so many options. But that's the big picture there. And then let me just go to Dow real quick. And then also explaining what do you call it? So with this happening here, we had a lower low here with Dow, and that pushed us up. And then remember when we were starting the sell model, and then right here when we retraced nicely right there, we had a lower low with Nas, and then we had higher lows here. So that was nice. And then right here we had a higher high in Dow. We had lower highs right here. kind of pushing the price down for sells, and then that made our new lower lows for the day. Dollar ended up, where did dollar go? 1 second. Dollar here, as you see, we did rush up and tag that piece of liquidity right there. Another I mean, it doesn't look like a bullish day, but it was still in the bullish manner. So that was pushing us down, and we'll see. I mean, we're still looking for a higher dollar. I mean, it doesn't look like it's stopping here, but we do have a new high. So do we get a little push up again? That'll push us down. Well, I'll get into that in a second, but actually, I might as well do it now. Well, no, I wanted to explain Dow real quick. So let me just do Dow. Real quick, same idea here. Dow, as we were selling, opened up the gap right there, sold off, came right to the 50% of that gap that I've been highlighted here. God, that's so annoying. I'm not sure why it always fucking moves like that. That's so stupid. All right, so yeah, price comes down first. We come immediately down, take out that low. Then we, come one more time, one drive down again to that 25, probably shy of the 25% level. Then bounces up to retrace to take out the high of the day, but get back to the open, and then double top there, and then comes down for another leg down. That's a sell model as well. Retraces right back, all the way back up. Look to the open of that 4-hour candle, basically tagging that wick and then selling off again. As you can see here, another bearish day here, and we're getting into that gap. Weekly is still bearish. Let me go to a 5-minute here. And then, I didn't tell you about the projection too. But here, same idea. We identified that range from there. All right, because when you put your fib from here, yeah, there's no way to make this shorter, bro. If you put your fib from here to here, you'll see that it wasn't a 50, so you're dragging it down. Same principle. Retraces back to a 50 here. This is also our gap that we had. 930 as well. Beautiful time to sell. I don't want it to take out that high anyway, because then it wouldn't be sort of bearish in a way, right? But it could have. I would prefer not to see it take out that high. I want to see it sell in here, obviously. And we're at a 50 right there. And then with that retracement down, you can project down here, half standard deviation right here. Price does make the leg all the way down, taps it pretty nicely, and then retraces again for another sell model into this range from there to there, and retraces, hits the 79 beautifully into that gap right there. And you can see here that I didn't take any trades, but if it did here, you could have done this a number of ways. What is this, a 5-minute? Let me go to 1 minute. Just show you what I would have done with this. All right, you see how it, and then, going outside the zones, this is what Dow does. Dow doesn't have the precision that we would like, but it's still wild in ranges, and but anyways, what was I gonna do here? Oh, short. Yeah. So if waiting for the 930, and okay, so the price comes back, takes out that liquidity. You could have been a seller anywhere right there, which is the top of the gap, and then as soon as it leaves coming down below the opening day gap, I mean, you're in profit, right? And that's the goal. You want to see price staying above, but below there, stays in that wick. If you waited for this candle, you could have done that. You could have done this as well. All right. Could have did this, right? As soon as it closed, pops in. You don't want it to go above there anyway. So, plenty of models you could be using here. And then this would come to that same liquidity that we were talking about, the 830 plus that low. And then if you wanted to hold, then you could have, well, as you see here, look at the price does come back on you, but you have to hold this as resistance. And this is the difference. Well, don't get me wrong. Now Nas does this too, but Dow is just a little bit worse for this. But and you see it does come back up. And then if you got spooked and you got out of this trade, then you could have got in, and you wanted to wait. You could have got in. Hold on a second. You could have got in. Let's see. Yeah, man, you could have, as soon as that thing closed, you could have did this. Could have did that, because this pops up and takes that piece of liquidity. That's that shift that I was telling you about. I'm sorry, the divergence I was just showing you about. But that's one way to do it. You know, or even here, could have did this as that model. Don't like this one though. But just getting back into this candle, you could have also done it like this. Oh my god. You could have did that. See that? Not breaking that candle right there. See that? Pops in. Many ways to do this, but that would have been the sell. And then as far as the buy goes, right here, you are now reaching in below liquidity. When you the liquidity that you took out, we're at 50% of this gap right here. And then it does come to the 25% right here. I don't even have to draw it, but if I put a 25% right here, the 75% level. See that? To the point. Look at that thing. Comes right to the, see this? I got the, see they're dotted lines, man. I did this so you could not, let's just do it that way real quick. See these four quadrants? Look how it comes right to that same exact level on the on that 25% level. So this would have, if you took this, I wouldn't have been mad at you, and you lost. Then as you see Dow coming down more times, but this is a confluence area right here, 25%, and then you got your fib here. I'm gonna delete this now, and I'm gonna delete that. And then price retraces, nice buy up to the 79 right there, and then boom, this is another opportunity to sell. So the purpose of that buy there, I mean, if you wanted to push it there, you could, but I would have pushed it when it closed probably. Same idea, right when they open, right when these candles open, you can get in. All right, and then you notice they don't ever break their lows of their candles. Anyways, price comes up right back up to there. Same idea with that resistance here with that block right there. See how it doesn't pass that right there, that high, from that high to that low. We break through it, and then we never break above it, right? And that's what you want to see, obviously, in being bearish. Just another sell model here, and it gets completed. Doesn't get completed, doesn't take out that low, but look, that sell from here, guaranteed to the 50 level here of this. And if you're holding, then you're trying to bust through. All right, so there's that. I mentioned everything. I mentioned here. I mentioned dollar. I didn't give you what I'm going to do. I have to go. Fuck, man. Look, I can't, I don't know, this is getting annoying. But, S&P as well. S&P came to that weekly imbalance and took out that liquidity that I had highlighted for a long time. So that finally panned out. Excuse me. Other than that, we're still looking for lower pricing. And, where's dollar? Okay, so I don't know. At this point, I don't know, man. I really don't know. Dollar could do this. If it's gonna do this, then we're gonna be according. So if dollar's bullish like this, or retrace if I say if it retraces, or if I say if it's buying, it's either gonna retrace or if it's gonna just buy up from right here. So if it does that, then we should see us peak down again to then you know, again, something like this. So far, we're going with the flow because this is very bearish. In my opinion, this shit looks like it's sinking. I can see why all these CLO companies fucking got rid of all their shit right here. All their stocks and equity. But so there's that. This I'm just drawing this as trying to give you an idea of a range here, and something like that, bro. All right. And then the same thing with Nas. No difference. So here we got, man, I don't know. Are they gonna drop heavy for that right there? That'd be crazy if they do. I'm just gonna kind of, down there. So however this looks like, this could retrace. Even if I was to do this. Fuck it. Same idea, man. Same idea. All right. So we'll see what happens. So, all right. Hope this helps. Take care. God bless.